also are in conversation with Shiv Parekh, founder and CEO of hBits. Shiv, welcome to the show. Thank you so much for joining us. My first question will be the pretty basic one. Your assessment of how you're looking at the real estate sector now being involved in REITs, your initial take here.
Hi, Agam. Great to be here. I think, this is a watershed moment for the real estate industry. Given that SM REITs has been regulated by SEBI in record time. I think they announced at the end of November after their board meeting, and it's mid-March, and they're going live with the SM REITs. I think this is a mutual fund moment for the real estate industry, where investors can buy fractions of a real estate asset. Traditionally, these assets have been restricted to large institutions who are putting thousands of crores. Now with 10 lakh, you can own just a fraction of the property, make rental returns, have a Deloitte, have an Accenture, have these MNCs as your tenants, and get the appreciation of these grade A commercial properties.
Just take a step back for us. It's also Samina joining in. Tell us what Hibbits does, because I believe you're already in the fractional real estate space. You've got a significant presence in Gujarat, from what I read. Tell us about what your business model is and how that's about to change with, of course, this getting regularized by the regulator.
Yeah, hi, Samina. So we've been in touch with the regulator, on this regulation for the last year and a half. So, they've been very positive about it. So hBits is in the fractional ownership space. We have customers that come from across the world, NRIs from around the world, as well as around India, whether it's Gujarat, Maharashtra, Pune, Bangalore, the north. We have properties in Mumbai and Bangalore. We're looking across the country for, grade A commercial properties, whether it's offices, warehouses, data centers. These are rent-generating assets that give 8 to 9% rental yields, as well as appreciation that can give you a 15+% IRR. So for us, this is a game-changing moment. We want to be the first SM REIT to list. And what this does for everyone in the fractional ownership space, it gives the legitimacy of SEBI. And that builds a lot of comfort, transparency, and trust to investors. Currently the overall industry stands at 4,000 crore. Even if you look at the traditional REIT market, the retail investor participation is just 10,000 crore. The mutual fund industry, on the other hand, is 50 lakh crore. So I think what's going to happen now is this industry is just going to explode because it's a very attractive product. And now that you have SEBI backing it, I think the sky is the limit.
Shiv, I completely agree. In fact, REITs have been long celebrated for democratizing access to real estate, just like you would to stocks. But the market got very excited with the fact that residential real estate now could also be offered. When you look deep down, you realize that the yields for rentals for residential in India remain in that 2 to 3% range, and that capital appreciation also might be 5 to 6% at best. Do you think somebody like you would venture into residential real estate? Is that an attractive avenue for investors and for you as well to raise money?
I think from a residential perspective, there's still a little bit of time before residential becomes attractive as an investment option. Because exactly the reason you said, right? You get 2 to 3% rental yields in residential real estate. On commercial, on the other hand, you're getting 8 to 9%. So residential, I still think we're a few years away. I think markets need to change a little bit on the residential sector to make it attractive from an investment perspective.
Right, Shiv. When you say you would want to wait before residential becomes attractive, what are the factors that could, in fact, make yields attractive? Because at the moment, we do understand that with the kind of demand that we have seen for residential lease increasing, and still it really hasn't moved the needle substantially when it comes to yields, rental yields. Your take here?
So I think, if you look at India, India's always been a home occupier in the sense an end buyer market. But you have Western markets like the US where multifamily housing is massive. And I think what needs to change in India, and there are a few other players who are doing this, is kind of the co-living space, right? The value add that you provide to occupants, to tenants, to make the yield from a 2% to say a 6 or 7%. You offer services in these large apartment complexes. I think that's going to change also with the more mobile demography, with the younger crowd, where they shift cities every 2-3 years. They're a little bit more mobile. I think rental will pick up, and I think that'll cause a rental appreciation. But I still think we're a few years away to that. But I think value-add services in these apartments is going to cause rentals to appreciate as well.
Shiv,
on the residential sector.
Right. Shiv, what will be next steps now for you at Hibbits? You said that you want to be the first one to go out and launch a small, medium-sized REIT. How do things change? Will your current investors, your current assets move into the REIT model? Will you launch a new REIT? Will those have new assets? You want to just break that down for us?
Yeah. So far we have about 300 crore that we manage across about 12 or 13 different assets. The plan is to migrate it to the new structure, because that gives significantly more liquidity to our investors that have already invested. So that's with the current assets. And yes, the 300 crore that we are at today, I think, commercial real estate prices, given that there's more interest, is going to increase. So I think it's the perfect time for people to get in. Our plan is to, we have a pipeline of assets across Mumbai, Pune, Bangalore, and Gujarat. And we're looking to touch 10,000 crore in the next 3 to 5 years. And, we're also adding a lot to our web platform, whereby which, in the same way one can, invest on, say, a Zerodha or a Grow, in a similar fashion, one can invest in real estate. You can own a share in a building that you can look, feel, and touch just through a platform sitting anywhere in the world.
Shiv, minimum ticket size of 10 lakh rupees, that still limits a large part of the retail participation to come in. I mean, if you're looking at this as a diversification tool, then 10 lakhs is probably HNIs, I would imagine. Tell me what you think about that. And also, with this getting regulated now, will your cost of compliance also go up, Shiv? And hence impact the returns that come into the hands of the investor?
Yeah, so I think both great questions. From a 10 lakh perspective, 10 lakh is high when you compare it to, say, what you can invest in a stock or a mutual fund. But 10 lakh is very low for real estate, right? If someone, and 50% of Indian household savings are in real estate. So Indians love real estate, but they've only been able to invest directly in real estate, not through, a platform. So 10 lakh in itself is relatively low for real estate. And I think this will come down. I think in, post Mrs. Butch's speech after the November board meeting, she did say that, I think as comfort is built in the industry, this number is going to come down further and further. So 10 lakh is just the start. Similar happened in the REIT industry, the traditional REIT industry. It started high and it came low. So 10 lakh will come down even further. On the compliance cost, yes, there is obviously more compliance that SEBI requires. But on the flip side, the volumes will scale. So, we are expecting to triple our AUM in the next 12 months to 1,000 crore. So just with, larger volume of assets, the compliance cost, it won't really hit the investor because we'll be managing a significantly large AUM. And SEBI's also mandated certain criteria for, investment managers. They need a 20 crore net worth, of which 10 crore has to be liquid. You have to have certain experience in the real estate space. So given all of this, only players that have size, scale, and experience will enter the industry. And so the compliance cost, while at an overall level, it won't be passed on to the investors because the volume of assets is going to increase.
All right, Shiv, we'll leave that. Thank you so much for joining us and taking us through your take on the latest in this space. So we wish you the best for the future. And on that note, we also slip into a short break, but on the